I'd like to touch on the maize market in order to give you a rounded outlook of the grains. It's going to be more of a summary because we've got Mike here. I'm very pleased that Mike is here to talk about the intricacies of the maize market. And so let's start by looking at the headline global supply and demand for maize. In the green bars here is the production, in the blue bars is the demand, and the black line there represents the end of season stocks to use ratio. As I said, in recent years the production shortfall has been made up by reducing stocks, but before we even came into 2012 we were in a tight situation anyway. A tight situation just got an awful lot tighter. As a result, we are having to see demand rationing, and this is the first year-on-year decline in global maize consumption since 95-96. So the first time in 17 years have we seen the global demand for maize actually go down year-on-year. Key contributor to what's going on in the global market is the US maize supply and demand, a key producer, a dominant exporter. So what goes on in the US has a huge impact. That poses a bit of a problem when we're faced with the largest US drought in over 50 years. US maize harvest is now almost 80% complete. We'd normally only expect it to be 40% complete by this stage. So the market is getting more clarity earlier on the state of the condition of the crop. And as such, we're seeing positioning by investment funds to reducing some of their positions and profit-taking, hence prices have eased slightly lower. However, at the end of last week, USDA cut their yield estimates and cut their production estimates, essentially tightening the supply of global maize. That gave us a bit of short-term uplift in the market, but since then we have drifted a little bit lower. Given the tight supplies in the US, we're also starting to see evidence of demand rationing on the feed demand side, with very thin production margins on livestock. And so livestock herds in the US are starting to be rationalised. For ethanol, it's a question of economics, but also it's a question of policy. We saw the removal of blending tax credits at the turn of the year. When we consider what's going on in the maize market, and indeed any commodity market, we need to understand the role of funds, speculators, call them what you will. The graph here is just looking at the relative positions of investment funds in Chicago maize market. The green element represents funds that have bought, that have gone long. The blue element there represents those that have gone short and sold. The black line represents the net position. So it's unsurprising to see that as the US drought has unfolded, the funds have generally improved their long position simply as they follow the fundamentals of supply and demand and tend to amplify those price movements. As we've come through and we've started to see the clarity of harvest, the fund positions have started to slightly ease back. It's not just US where we have a maize issue, we also have maize issues in the US, and typically expecting the crop to be 10 million tonnes lower in Europe. Again, this is weather-related production issues, particularly in the southeast of Europe, affecting key producers such as Romania, Hungary, Bulgaria and Serbia, and really pulling down the availability of the feed grain. This is likely to have implications for the wider European grain market that we can touch on later. So with confirmation that we've got maize issues in the northern hemisphere, the market now looks to the southern hemisphere for some additional supplies, some supply relief mid-season as we move into 2013. The bars here on the graph show annual production, and we can see that it's increased over time. The black line there shows that production as a percentage of the global crop, around 14%. So it's not insignificant, but it's not a huge amount. And certainly when we compare it to the same data for soybeans, it's certainly a much smaller player for the feed grain market. So it can provide some relief to the market if they can pull off those record crops. But it's very much weather depending, and certainly not the amount of relief that they potentially bring into the soybean market. In terms of just summarising the US, the maize quickly, we've got to expect that the US drought is the big issue here. It's made a tight situation even tighter. So we've come through a period where we can't just run down stocks because they're not there in the first place to run down, and so we have to see demand rationing in global feed grain consumption. Hence, that's why we see high prices. We've also got European issues and compounding those US drought impacts and this extra reliance on the South American crop. And also, let's not forget the fund positions.